Hello. How is the sound? Howdy, Casey. How are you doing? Hope the sound is good. Hope my dancing is even better. Hope you're all doing well. Um, mm, 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 mm. mm. Lol. Yes, indeed. Oh, you have no idea. I'm such a great dancer. It's when I dance, it's even better than when I sing. And when I sing, you can see birds falling off of the trees. So, but all jokes aside, you're not muted. Well, that's good enough. That's already something good, right? So real quick, we gonna go over everyone who's gonna watch later. It's kind of amazing, I gotta say. You show up, but viewership for the lives, not the videos. The videos actually do a lot better, but the lives usually have about 100 plus viewership, which is quite phenomenal for having just one member always consistently show up and just like then 100 people watch it. It feels so weird, but alrighty then. I guess for so this is for Casey and the rest of the 99 plus of you, 100 plus. Now, for those who watch later, please do not forget to like, subscribe, and all that wonderful stuff. You know, it really does help keep the channel up and going and all that beautiful stuff. Hello, dear. Good to see you. By the way, there will be another video about gold. Hopefully, it will be out within the following 2 hours-ish. I will be making another video about gold separately, a video, not a live, separately about gold. There is a lot of interesting stuff out there that people may want to know and see. There's some stuff going on. We may be seeing a rally towards 5,700. So yeah, well, you better watch that video, otherwise you'll be behind. You won't know. Now let's go back to our beautiful horses. Now let's talk market. Let's talk major indices. S&P. Those of you who have been consistent on the channel, of course, are not surprised and have seen we opened up with a little bit of a gap. We gapped downwards, then stayed for a little bit kind of hanging and kind of went sideways. Then we opened up with a gap upwards today, which today's gap, actually, you see, moved lower towards a filling, a completion of the generated gap over the day today. Instead, we ended up reversing, moving upwards and filling in the gap, just as I told you yesterday. I think it was on yesterday's a video that I mentioned. It's probably most likely, given the structure of the momentum, the setup that we had, to see a closure and a filling of that gap, which we saw today. The gap below us is still remaining to be open, at least for now, for the time being. Let's see how the momentum moves. As you guys all can see, we have started a correction moving downwards, at least for right now, should be considered correction. But let's see whether we're going to break out of the channel and actually establish a move all the way to where the bottom gap today was, at 7,692. And by doing so, of course, filling in the gap, potentially seeing a retest, but we'll see all that in the larger time frames, longer duration time frames. So if we're looking at 5 minutes right now, we are arguably having mixed momentum starting to kick in, because bearish momentum just played out, as you can see, given this time frame. So this is a whole batch of 5-minute candlesticks. In other words, if you count the whole thing, looks roughly about like the past 30 minutes that we've been going downwards altogether. And now momentum is slowing down, given that convergence, the confluence of the forces, the confluence of the momentum. And so from that, we can gather that we're probably gonna stagnate a little bit, given given the time frame and the setup. We're probably going to see a little bit of a retest of this median, at least for the time being, given the 5 minutes. So we're basically residing right on top of it, roughly 7,720-ish handle, give or take. 30 minutes, on the other hand, is still showing a lot of inclination for bearish momentum, given how we have 17 more minutes to go. So basically, I would say, well, we're closing on half half of the time for that candlestick has already been eaten away, so to speak. And so we can easily see a couple of 5-minute candlesticks having a bit of a corrective motion right there and still remaining bearish on the grand scheme of things. Probably within the framework of today's session, still moving to lower to complete that gap, roughly, as we said, 7,700, and even as low as 7,693. So about $30 more downwards, give or take, from where we're at, give or take. If we're looking at the 45 minutes, we actually, this is kind of interesting, because this is objectively bullish. And since we crossed over the 50 points, the 50 points on the stochastic RSI, and we still are with clear divergence, although we're seeing a little bit of a curvature, it's not enough to say that we're slowing down. And so, in fact, on the 45 minutes, there is an indication here that on a broader scheme of things, meaning with the following, I would say, 2 or so hours, we may end up seeing movement towards 7,754.53 still. Basically retesting previous levels, including the confluence of the forces, the convergence of the forces. Basically, you can see the median right here crossing in the center of the screen, that very same line, basically this line, those who do not understand. It's very much crossing over right here with confluence with that already well established and known support resistance level 7,754.53 if you want to be super specific. If I got my points correct, I think I do. And in fact, there you go. We just seen that 45-minute candlestick just change over. We just entered and started generating a new 45-minute candlestick, and we just seen how that confluence and convergence directionality just appeared right in front of us. And so, as I was about to go into, this is not necessarily indicative of a bullish momentum, and yet this structure, given that confluence, still probably will result, probably, not necessarily, with a potential retest at about 7,754.11. Give or take that confluence with the median and the resistance level. So basically, we're not thinking it's necessarily an occurrence that will, it's not something that must happen. It's not a motive-like move, but it definitely is quite a possibility. Jovanel, okay, hello, good to see you there. Hello. Shout out to all 3 of you guys who actually are on the live. And for the other 4.5 people that I'm probably not seeing, and there are as well. So shout out to all of you, you beautiful legends. Now, now that we move to the hourly, in fact, we're still see that now this is the reason why I think still that we are going to retest that 7,754. The reason being is that we're right now transitioning basically both of our moving averages in the stochastic RSI, quite indicative of a directionality that is more so bullish rather than bearish, given how we're crossing the 50 points in the direction of the upside. Bullish momentum definitely is dominant in the shorter range period. Basically, we are right now objectively more so bullish in the shorter range of time rather than being bearish. What does that mean in actuality on the ground for us? That probably means and confirms that assessment that I think that I have about the market retesting 7,754.53, and of course maybe sliding a little bit over. That is a natural occurrence, so a little bit of slippage, a little bit of a retest. In other words, although we will see in a second that it appears to be that the market is, on the grand scheme of things, formulating a return to our head structure, to our sideways trend we've been within the framework of since about, arguably, I would say the beginning of May. Yeah, that's kind of around the beginning of May when we penetrated that area. You can kind of see it right here. And now I think we're going to be aiming back down towards the bottom of the channel, establishing an inner head and shoulder structure, which I didn't think is going to be that pronounced. In fact, I thought we're going to see it a little bit more swinging inwards. And yet, regardless, that still appears to be the occurrence. And so on the hourly, more so than not, it appears that we are still moving within the very narrow trend that we kind of formulated right here, which is of course a sideways trend, just like the arrow suggests. And arguably, of course, we're going to run out soon as we're transitioning from the edge, the left edge of the channel to the crossed and tested median. And now we're on our way to the right side. Let me zoom in so all of you ladies and gents can see it clearly. And so that's why I'm saying right now the most probable sort of occurrence, there is basically another channel, inner channel, if you will, the one we viewed on a smaller time frame just a second ago. That channel is going to be retested in confluence, as we said, with that 7,754. Basically, that kinda to keep it clear and simple. Right now, the established destination that the market is showing me at the current moment, or the current setup and momentum, is that 7,754.53. Of course, like I said, we could see a little bit of a slippage over before we continue downwards. Just to kind of keep things clear on what it is that I've been trying to show there. Okay, like so. And of course, I do think that what will end up serving us as a support level is pretty much the very same behavior we still have been within the framework of. It's that sideways-like structure channel. In other words, we will end up testing 7,695-ish handle before we cross out of this channel on our way back down, filling in the gap we have left over at around 7,600 and 7,630 and around that vicinity, basically 7,607, give or take. Once we complete that, that will be quite indicative of us going back into the overall broader channel we've been moving within the framework of for some time now, which is more of a wedge-like structure, by the way. Which, of course, that's the anticipation, but let's see why that anticipation. Simply because right now, objectively, although we are seeing some stagnation on a 4-hourly, which again, that's why we're seeing that sideways price action, or rather a reading out of the data that results in this sideways sort of view. And on the daily, which then the following time frame, which should matter to us in this instance, we are objectively already with bearish directionality. And given how the time frames work, if we can assess that this trend, giving its divergence and directionality right now as is, going towards the 50 range, it's not going to be all that surprising if, continuing at this rate, the momentum will continue breaking, as we said, completing the first sort of phase of the process, that retest. And what we are seeing is, once we do end up crossing that 50 range on our way down, if holding on to that divergence, we basically are potentially having a reading a handful of candlesticks forward. Given this structure, given the time frame, we basically are talking about a handful of days outwards. Given how we are, where we are in the week right now, we only have a handful of days. It's basically today, tomorrow, and Friday, which tends to be more of a weaker kind of day, not with too much momentum, and simply because of lesser liquidity. And so it's not going to be all that surprising if towards the weekend, as we progress towards the weekend, we're going to see more of that bearish momentum sort of filter through, come through, print in the actual price action. And not necessarily, I'm not saying the entire this thing, but what I am saying definitely that the market is indicative of right now, that as we're going to progress towards the end of the week, potentially we're going to see a movement downwards towards the bottom of the current channel on the daily. Again, that is simply the moving average that generates or shows us rather where the channels are residing. It's not something arbitrary we decide based on our whim. Those are all mathematical structures that, in fact, we save ourselves the trouble of trying to find out and calculate correctly. We use precise bots to do that for us. That's kind of the accurate way to do so. We'll call them indicators rather than bots, but at the end of the day, that's what they are. They're robotic systems that we use in order to simplify our processes. And so if we're seeing on the daily and that handful of days going downwards, we should assess, given the structure, that we should be testing 7,384.45 given this setup, potentially either towards the end of this week or into next week, even though temporarily we've been moving sideways. Now, on the weekly time frame, in reality, we are moving towards convergence, still being in the neutral zone on the bearish side of things. In fact, arguably right now, we really are going super neutral because we're seeing, again, confluence. We're seeing a crossover of the forces. Those who are not sure, you can read right above me. There is sort of a breakdown, a simplified version of how the stochastic RSI functions, or what sort of how do we use the tool and read it, basically. And so that confluence, roughly at that 50 points at the center, in fact, indicates, as we tend to, kind of jokingly call it, borscht, because those who don't know, it's a Slavic, very tasty red soup of sorts. And borscht because bearish and bullish kind of mixed together, simply because at this stage, especially when you're seeing the confluence, the crossover of the forces, especially back and forth, and mostly at that 50 range, it kind of shows that there is, don't get it wrong, it doesn't mean that there is no momentum whatsoever. There is no wind in the sails. It's just that there is wind that's pushing you forward, and pretty much just as much wind that's pushing you backwards, to the point where you pretty much end up not moving anywhere. You end up stagnating on the spot. Since the market can't really stagnate on the spot nor go flat, a flat line, so to speak, what we'll see is a kind of a sideways continuation with more volatility, given the range. We're looking at the week, and so they're quite, a range of volatility within the week that can equate to about $100 easily in every other direction. But arguably, although this points to be bullish right now, temporarily so, I would argue that all that bearish momentum that we see and I warned about, that is going to start flowing inwards, will slow this process down, similarly to what we just saw earlier on the 45 minutes, how the lines started kind of moving towards each other, towards a confluence, towards a crossover. And when that crossover happens, basically what we will see is dominant and bearish dominance, bearish momentum taking over, and price action subsequently reacting and starting to move lower with it. So on the monthly, which is something that I've been warning about for quite some time, and especially my members are fully aware of the implications of that sort of time frame and what we're seeing setup wise on it. What we're seeing actually is a holding on, very strong holding on to bearish strength, which still is in basically the current setup here that we're getting is far more indicative of a continuation of a bearish directionality, although temporarily right now, even all that bullish momentum that we've seen in the system, bullish momentum, right, the recent price action, and especially that little less zit that we had right there on the top, antenna, if you want to call it, whatever the hell you want to call it, doesn't matter, since we have kind of that structure, right, and we have that head structure, and then we had that zit-like thing, or antenna, whatever the hell you want to call it, because the overall broader thing looks like this is our head on the broader scheme of things. And so we already are seeing a build-up of bearish momentum within that very narrow range we're moving within the framework of, or rather have been moving for the past, what is that, like a couple of weeks or so. And now we're about to break out of it back down towards the previous sideways range we've been moving within the framework of. And when that daily basically starts to cross over our 50 points right there, by that time we'll probably correct that little antenna downwards. And as we're going to correct it, we're probably going to be far closer to our 50-point range, which by that time we're probably going to see more of a correction, as we just mentioned earlier. And the continuation below the 50 points, basically everything that will happen right here below, will be indicative of a continuation from that point downwards onwards, right? And so what we're seeing basically on that weekly, thank you, is temporarily and will be mitigated once the daily bearishness that we're seeing right now in the system will flow in. We'll see confluence, crossover of the forces, and a continuation of that bearish direction that I've been indicating and telling you all about. That in fact we still can see, irregardless of all that bullish momentum that played and moved into the system in the recent couple of weeks, still we remained bearish on a broader picture. And that means if we are expecting a couple of following candlesticks on the current time frame outwards, those who are confused and not sure we're on the monthly time frame, we are basically saying that the following 2 to 3 months, when the current month will be complete. Technically speaking, of course, it says 12 days, but we all know in reality what we have is, well, the leftover of today, tomorrow, Friday, so that's 3 days, 4, 5, 6, 7, 8, 9. We have only 9 days in reality, including today. So basically just 8 days left, not including today, for this month. And when this month is complete, when August is complete, we are going to be basically seeing a new candlestick. And if all that bearish momentum that I'm already warning about will transition as I'm expecting it to, what we will see is the monthly becoming even more so bearish, more so indicating of a downwards trend of liquidity moving out of the market and more liquidity moving into the market downwards, short selling liquidity. In other words, short selling positions, right, that basically pressure the market to go even further lower. Now, we're not even going to mention geopolitical conditions. We all know what the current state of the world is. Oil prices, aliens, pandemics, you name it, meteorites, earthquakes, whatever the hell. At this point, nothing will surprise me, literally. Land walking, man-eating sharks. I don't know. Like at this point, literally nothing will surprise me. I don't know what will be the excuse, the actual conditions on the ground, so the boots on the ground conditions to make this occur. And what will be the excuse? I assume, unfortunately, it's probably going to be something oil-related, war-related, most likely. But like I said, I'm not going to be surprised by anything at this point on. And so what we're really seeing is a preparation and a build-up towards that move on all the time frames we just gone through. And in reality, the 3 months, those who know the quarterly, although on the S&P it's a little bit problematic to read and understand that because of, Greg, didn't you just say the confluence of the forces? Yes, but there is no confluence. We are actively bearish, and even though we had a lot of bullish momentum, we still remain bearish dominance. In other words, throughout the recent period, pretty much since January, all of this, in fact, to be super precise, it's since October that the 2025 that we started losing momentum completely, and we're just basically now with deteriorating momentum. And although we're getting still a higher result on the price action, that's kind of the trick where people don't notice while slowly deteriorating downwards. 1 second, pardon me, not what I wanted. Yeah, but anyway, basically what you're getting here is, let me see if I can bring up the NASDAQ real quick. Those who haven't been noticing, on the NASDAQ, in fact, we've been seeing that we have been building up towards a downtrend for some time now. Basically, if you don't realize, this is the opposite equal place on the NASDAQ itself, where now on the S&P we are kind of above here and we have a bit of an antenna going on. We're kind of in this range, but NASDAQ here is still indicative of a downtrend. And well, honestly, you better be able to see what I'm talking about here. And if not, I don't know if an optometrist will help you. You probably need to go to another special doctor. At this stage, basically what we're seeing is more of an entanglement, retest, a relief rally of sorts post a major movement down as the market building up a major downwards position. And here is your monthly, as I was saying, that is still significantly far more bearish on the NASDAQ. And here is our quarterly, which is sort of the coup de grace. And as you can see, it is absolutely tremendously bearish and cannot wait to explode. And believe it or not, the NASDAQ, as being a stronger force over the S&P, can drag the S&P downwards. In fact, one of them usually drags the other one down. It kind of doesn't matter because they all oftentimes share many assets and broader market conditions are aligned between them, as you can imagine. So that is kind of it. It's pretty clear. I've been telling and warning and saying for quite some time now. So nobody should be surprised by this. And there is a lot of indications for the market to behave the way we think it's going to behave. various other tools that I use with my Academy members. I teach them one-on-one how to use them. And in fact, basically, if you pay attention, for example, the NASDAQ, you're going to see that the pull, the market directionality right now, the pull of the market is happening a lot more towards the downside. As you can see, we're generating lower lows, generating lower highs. The entire directionality is quite indicative of the beginning of a bearish trend. That bearish trend starts with a sideways like trend itself that then spills over, breaks down because of fear and lack of knowledge of why the price action behaves the way it does, and people end up capitulating because fear is a very, very powerful force. And if you're not anchored to actual knowledge and understanding of the cycle, it makes sense you capitulate very rapidly because you don't know what is ahead of you. On the other hand, now I wouldn't blame anybody from capitulating, given the the scale of the downwards trend that we're about to see in the upcoming, I hate to say it, but at this rate, it looks at least like it's going to last at least a year and then some, easily 2 years, maybe even a little bit longer. In fact, I'm going to be having a special meeting with my members because I have a wide variety of members in my academy that gone through the academy and understand these processes, and some of them are not as new to the market as the others, and some of them have been through multitude of cycles. And in fact, this week and next week in my community, if you will hurry up and join in real quick, now on a major discount, by the way, all the tiers are significantly discounted, all the way up to 70% discount. As you can see, basically this, a full access tier normally is $90 a month, but if you click this thing, it becomes a 72 and then goes in half. So basically it's $70. 70% discount. So instead of 72, 36, $6 for you guys, the Academy members, all of you, all the Academy members. If you guys want to continue participating in the weekly meetings and all that fun activities that we're going to do from now on, even the Academy graduate tier is basically a paid tier. It's a very cheap one. Again, only for Academy graduates. Anybody else who did not graduate the Academy will simply be refunded and kicked out of it. And I will not see it in a good way. Future prospects of signing up might be problematic. As you can see, again, just the basic tier, just the introductory tier. So the basic access, which gives you access to the Discord, to get to know the environment, community, casual chat, a little bit of other information we discuss, meetings, and all sorts of wonderful things. All that is included in that. What now you can get for merely $4 a month, at least as a sort of as a test, as an introduction, as testing the community, testing the ground. And of course, if you want to be truly independent, like my actual Academy members are, the Technical Analysis University, basically, now even that is discounted, and you can join temporarily until the end of this month, instead of at the old full price 5,000, which by the way is discounted as well, believe it or not. That is a 50% discount on the original price. And right now, temporarily, just for this month, one less time, I give you my word, this is one less time before it's forever locked at 5,000 and above and higher and north of that, $4,000. It's one-time payment. It's not monthly. It's a one-time payment. And when you graduate, when you complete, of course, you then get to pay only $6 a month if you'll do it rather rapidly and get the discount. If not, $15 a month. Not a big deal. It's quite worth it. People who've gone through my academy, some of them were able to generate returns of north of $150,000. In fact, to be super precise, around $190,000 in a single month. In fact, let me brag a little bit about my testimonials and Academy members who already graduated. And this is their testimonials and the reviews of the Academy. And if we'll go back here, I'll brag about one of my beautiful members here, Leo. I was able to generate 183, about 184 almost thousand USD in 31 days, with the knowledge that I taught him, of course. And so, ladies and gents, don't miss out on this opportunity. That's especially a message for those who will watch later, because those who are on live right now are active members, and I know they are subscribers and Academy graduates as they are. And that's it, ladies and gents. I think I'll see you in the next one. Later on, I'll make a video about gold. Don't forget to like, subscribe, ring the notification bell, comment down below, and use all the links in the description. I hope to see you in the community. For now, you all have a wonderful evening.